Good afternoon, ladies and gentlemen. Thank you for joining the Prevest Denpro Ltd Q1 FY2024 earnings conference call. Joining us on the call today are Mr. Atul Modi, Chairman and Managing Director, Prevest Denpro Ltd, Mrs. Namrata Modi, Whole-time Director and CFO, Mr. Vaibhav Munjal, Chief Marketing Officer, Prevest Denpro Ltd, Mr. Vinay Jambal, Financial Advisor, and Dr. Sai Kalyan, who is the Director of Research and Academy of the Prevest Denpro Ltd. We will commence the call with the opening thoughts from the management team, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature. The actual results may vary from these forward-looking statements. I would now like to hand over the call to Mr. Atul Modi to commence by sharing his thoughts on the performance and the progress made by the company. Thank you, and over to you, sir.
Good afternoon, our esteemed stakeholders. Thank you for joining us today to discuss the financial results of Q1 for the financial year 23-24. I am pleased to announce that our company has shown good performance during the June quarter of this financial year. Our revenue for this quarter is approximately 9% higher compared to the same period of previous year. During this quarter, our export business has not shown anticipated growth due to the ongoing global recession and foreign exchange crisis in many countries. The export business has shown a marginal growth of 2% over the same period of the previous year. On the domestic front, there is a significant growth of 17% over the same period of previous financial year. Despite the challenges faced in the international market, as a forward-looking organization, we are taking proactive steps to strengthen our reach globally and explore the business opportunities in countries like Australia, Canada, Brazil, and other developed countries where presently we do not have any business. Further, we are increasing our efforts to expand our business in USA, where we have received very good response for our products. We are making efforts to expand dealer network globally that will drive our growth in the international market. We are very conscious that huge potential lies for business growth for our products in the domestic market, and there is a need for focused and professional approach to the marketing activities. And therefore, we have decided to decentralize our sales and marketing activities. In order to achieve this objective, I am happy to share with you that we have incorporated a wholly owned subsidiary company under the name of Benvisio Biomed Limited. The primary objective of this company is to take over the marketing activities and also to diversify into new business lines distinct from our core business, while the parent company will continue to focus on research, development, and manufacturing of dental materials and other similar products. In addition to our financial performance, I am delighted to share with you an exciting development that holds immense promise for the future of Prevest Denpro Ltd. Our relentless pursuit of innovation and commitment to delivering cutting-edge solutions have led us to a significant milestone, the development of a new product line in oral care and specialized disinfectants for maintaining high level of hygiene in hospitals and dental and surgical clinics. Our research department has successfully developed a wide range of oral care products with innovative formulations and advanced application features. I am delighted to inform you that our new oral care and disinfectant product lines are fully commissioned, and commercial production will start as soon as we get the approval for pending regulatory compliances. Our 3D resin presents a game-changing opportunity for the dental industry, enabling precise and integrated designs in various dental applications. Dental 3D resins meeting international quality standards have been developed in-house and have opened up new avenues for business growth for our company. We firmly believe that there is additional product lines. These additional product lines will create new opportunities for growth and reinforce our position as a leader in the dental industry, being the only Indian company with such a wide spectrum of products manufactured under one roof. As we expand into these new product segments, we remain committed to our core values of quality, innovation, and customer satisfaction. We will continue investing in research and development, leveraging our expertise to create solutions that cater to evolving consumer demands. In conclusion, I would like to express my deepest gratitude to all our investors for your unwavering support and trust. The introduction of our oral care disinfectant and 3D resin product segment showcases our determination to meet the evolving needs of our customers and expand our market reach. We look forward to the future with great optimism, knowing that our strong foundation, dedicated team, and innovative spirit will continue to drive our success. Your continued support and confidence in our company are too valuable to us. Thank you for being part of our journey towards success. Thank you once again and have a wonderful day. I will now ask Mrs. Namrata Modi to present the financial report for Q1, financial year 23-24. Over to Mrs. Namrata Modi.
Good afternoon, everyone. As the Chief Financial Officer of Prevest Denpro Ltd, it is my pleasure to present to you the financial results for the first quarter of the 23-24 fiscal year. Today, I will provide you with an overview of our performance, highlighting key financial ratios and important decisions that impact our business. Our revenue for the first quarter stood at 14 crores, representing an 8% increase compared to the same period last year. Our profit after tax for quarter 1 financial year 23-24 reached rupees 4.08 crores, indicating an 11% growth over the same period of previous year. This performance can be attributed to the collective efforts of our dedicated team and our strategic focus on operational efficiency. EBITDA for the quarter under review was rupees 5.57 crores, demonstrating a 7% rise compared to the same period last year. This improvement is a result of prudent cost management, enhanced productivity, and our continued emphasis on value-added products and services. Our EBITDA margin was 40% in quarter 1 financial year 23-24, showcasing our ability to generate profitability while efficiently managing costs. Furthermore, our PAT margin for the quarter was 29%, underscoring our commitment to sustainable growth and shareholder value creation. The Board of Directors has approved a final dividend of 10%, reflecting not only our confidence in the company's financial health, but also our gratitude for the trust and support you have bestowed upon us. This dividend is a result of our consistent efforts, prudent financial management, and the dedication of our entire team. I must also inform you that the promoters have taken a decision to forego the final dividend for the current fiscal year. This decision has been made in light of our company's strategic focus on investing heavily in research and development, as well as exploring new market segments for future growth. These investments will enable us to stay at the forefront of technological advancement and provide innovative solutions to our customers. We firmly believe that These investments in research and development and for expansion into new market segments will pave the way for sustainable long-term growth. By strengthening our product portfolio and capturing emerging opportunities, we aim to solidify our position as a market leader in the dental industry and deliver substantial value to our shareholders over the coming years. Despite the global business challenges, foreign crisis, and disruptive supply chain dynamics, which impacted industry across the board in the first quarter of financial year 23-24, I am proud to announce that Prevest Denpro Ltd not only sustained its profitability but also managed to navigate through these challenges with resilience and innovation. Our financial performance has remained intact and we remain committed to our vision of delivering cutting-edge dental solution to our customers. While the promoters have decided to forego the final dividend to support our strategic investment, we are delighted to extend exclusive benefit to our esteemed investors as a gesture of appreciation for their loyalty. Thank you for your continued trust and confidence in Prevest Denpro Ltd. We look forward to your continued support as we embark on this exciting journey of growth and innovation. Thank you. Now, I would like to convey to Mr. Vaibhav Munjal. Over to Mr. Vaibhav, who is Director of Marketing. Over to Vaibhav Munjal.
Hi. Good afternoon, everyone. Thank you for joining the call today. Before I start, I would like to extend my sincere gratitude to our esteemed investors for your unwavering support. It is your trust that keeps us pushing to achieve newer heights. As already informed by Mr. Modi, our company has shown reasonably good performance in the June quarter. Though exports have shown limited growth in Q1 due to known factors like global recession and foreign exchange currency crisis in many countries, our domestic sale has done very well and grown by 17%. Not only this, we have added 7 new dealers in the domestic market and 5 new dealers in the international market within this quarter. We have also invested in our teams to expand our reach and further drive our growth. We have strong plans in place to capitalize this and increase our business further with newer products and marketing strategies. Today, I'll take this opportunity to provide you with an overview of our company's market strategies and share some exciting news about our newly incorporated wholly owned subsidiary, Denvisio Biomed Limited. Denvisio Biomed Limited is set to become strategic arm of Prevest Denpro Limited, focusing primarily on marketing and further strengthening our position in the dental market. Denvisio Biomed Limited has been established with the sole purpose of enhancing our marketing capabilities. By strategically leveraging its expertise and resources, Denvisio Biomed Limited and Prevest Denpro Limited will work together to develop and implement innovative marketing campaigns, strengthen our brand presence, and drive customer engagement. With Denvisio Biomed Limited as a strategic arm, we aim to tap into new market opportunities, build strong relationships with our existing customers, and attract new ones. The subsidiary will act as a catalyst for growth, enabling us to adapt to the evolving needs of the dental industry and stay ahead of the competition. Furthermore, Denvisio Biomed Limited will play a crucial role in diversifying our product portfolio in times to come. By conducting in-depth market research and analysis, our subsidiary will identify emerging trends, customer preferences, and unmet needs within the dental care sector. As we move forward, we are confident that the incorporation of Denvisio Biomed Limited will unlock new avenues for Prevest Denpro Limited. Our expanded marketing capabilities, coupled with our commitment of innovation and customer satisfaction, will propel us to greater heights in the dental care market. In conclusion, I would like to once again express my gratitude to all our investors for their unwavering support and belief in our vision. We are excited about the future prospects that lie ahead, and we assure you that we will continue to strive for excellence in all our endeavors. Together, as Prevest Denpro Limited, we will transform the dental care landscape and create brighter, healthier smile for all. Thank you once again for all your kind support to us. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Nitya Shah from Kamaya Kya Wealth Management. Please go ahead.
Yeah, hi. So I was reading the annual report of this year. So I noticed that the director of marketing, he is already being paid a salary of 10 lakhs per month, and a commission of 2% is being paid for sales above 20 crores in the domestic segment. Now, what I want to understand is in the domestic segment, the sales are already around 20 crores. And I have never personally seen commissions being paid on sales to a director of marketing. Can you explain why would you want to impact margins by 2% as this would, hurt the shareholders? I just want to understand the justification of this.
Mr. Vaibhav Munjal is an experienced, educated salesperson who was already drawing salary more than what is being offered to him now. And because he has taken over the responsibility of sales and marketing of our company, and he is aggressively going to push the business in the domestic market. As a reward, as an incentive for his efforts in promoting the business and growing the domestic market, he has been offered an incentive of 2% for his efforts in taking this business over the existing business level of 20 crores. So this is nothing, just an reward of 2%. But salary, what we are offered to him is commensurate with his education, his experience, and what salary he was already drawing. It is at par with the same. So nothing extra and more has been offered. This is the market, standard at which he was already operating. So he has been elected as a director for sales and marketing, and it is justified to offer him this kind of salary package and incentive.
So, but why not offer ESOPs instead of directly giving commission on sales? That is my question. That usually the norm is to award through ESOPs.
At present, we do not have any scheme of offering ESOP to any employee. So if we opt for that, we will review this, part of commission at any time if we introduce the ESOP scheme. But since that scheme is not applicable, not effective, not implemented, and there is no such scheme, so this is the only option available for us to offer incentive for his efforts and for his, for the growth of this company.
Sir, but as a shareholder, I would request you to please review this decision once more, as it is detrimental towards shareholders.
We will look into this.
Okay. Thank you.
Thank you. We have the next question from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, good evening, sir, and thank you so much for taking my question. Sir, I just wanted to ask I think our target was to grow above 30% with the margins of better the margins of what we've done last year. So also now, what do we see as a market condition? Are we sticking with the guidance that we've given previously, or how should we see for going forward?
We couldn't understand your question. The voice was not clear.
Hello?
Can you please repeat?
Yeah, sorry. Am I audible, sir?
You're audible, but the voice is, not clear, not clearly audible.
Okay. Sir, I was just trying to ask that, sir, we'd given a guidance of growth over 30% and margins of last year. So, are we still sticking to our revenue guidance, or how do we see our environment, could we see some slowdown, or how would it be, sir?
You see, as we have already informed you that there is a decline in the export revenue in this quarter because of the prevailing recessionary situation in the world, and also there are foreign exchange crises in many countries. We are facing this situation, but very optimistic that we will have a good business in this quarter, and we will present a good set of numbers for this quarter. We are very optimistic that our domestic business will grow at a good, accelerated speed, and we will be able to present a good result in this quarter, in this September quarter.
So can we quantify what would be our FY24 target then for revenue?
See, the targets already we have in the last Concall also we have set a target of over 30%, and we still are working on to achieve that kind of business growth in this financial year.
Okay. So because that way we might have to clock in a revenue of maybe 17 crores a quarter now. So is that possible, or how are we seeing it? And also I would like to know the export domestic split in this quarter versus previous quarter. So.
Sorry, I didn't get your question. Can you please repeat?
Sir, we did 50 crores revenue last year, so a 30% growth would be 65 crores, and based on that, we might have to do 17 crores revenue per quarter. So is that possible? And other question that I had was, could we know the export and domestic split in the current quarter and the previous quarter?
In the previous quarter, the split between the domestic and the export was about 55% domestic and 45% export. 40 domestic, 60 export. But in this quarter also we are going to have the similar kind of export and domestic split, and we are very optimistic that our business will grow in this quarter and will be able to achieve the target which we have set for this quarter.
Okay, sir. And sir, in terms of margin, again, we would be able to go back to 40% plus, or how would it be? How would it turn out? Are we investing more in research and marketing?
The same level. We are maintaining the same level, approximately 40%, and we will try to maintain the same level in the future also.
Okay, perfect. And sir, would you see any other risk challenge that can act as a speed bump for our growth?
The only risk and challenge is the export foreign exchange situation and the recession in the international market. Other than that, we don't foresee any risk at the moment. We are very confident about the domestic business growth, and we are trying other opportunities in the international market where we can grow, and we are hopeful that we'll be able to cover up for the business loss in some countries because of the foreign exchange crisis. And we're very confident we'll be able to give good results in the next quarter.
Okay, so that helps a lot. And sir, if I may, just one more question. Sir, how is the domestic market growing? What would be its size, and what kind of percentage do we be holding currently?
For this, I think the right person to answer your query is our Sales and Marketing Director, Mr. Vaibhav Manjal. So I will request Mr. Vaibhav to please elaborate and give proper reply to this query.
Yes. If
if you can just repeat the last part of the question. You asked.
I was just asking what would be the domestic market size and what would be our share in that currently, and as yet increasing a new product line. So how is that increasing? So what would be our total addressable market and what would the market what percentage do we want to capture?
Yeah, this was clarified earlier also. So the approximate market size that we have there, in domestic market size of rental materials is around 1,000 crores. Okay, and our share is around, which is mainly dominated by the MNC players. And our share in that is approximately was 2%. Now it is approximately anywhere between 2.5 to 3% is the share that we are looking at.
Okay. And so at what rate is the market growing, sir?
So this quarter, we estimate the market to have grown between 8 to 10% in Q1 over last year.
Okay. That helps me a lot, sir. All the best for future. Thank you so much.
Thank you. We have the next question from the line of Sandeep from Nuvama. Please go ahead. Mr. Sandeep, your line has been unmuted. Please proceed. If you have muted the line from your end, please unmute and proceed. So we move to the next question from the line of Sanjay Shah from KSA Securities Private Limited. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. Doctor, I'd like to understand our product demand, to whom we compete, what is the size of our product, because what I see that we have so many distributors, we have got so many more than 100 products, but our top line is not growing since last many quarters. It is hovering around 11 to 13 crores and all. So what is the scope of our business growth? Plus, we are entering into new vertical of oral hygiene and all, which is predominantly for B2C and all. So how we are going to cater that where we compete with so many large manufacturers?
As far as the business growth is concerned, in the last 2 years, we have a very impressive growth of over 30%. And we are very confident that this growth trajectory will be maintained. Barring this quarter, when we had some issues and some, international business recession, rest everything is going on very well. And we are very confident that we will continue to grow. And the growth is very impressive in the last, if we look at the preceding 2 years, we have grown over 30%. So we are very confident the growth will continue. And we have a very good product line. We have all products well established. We have quality standards, international quality standards. Everything is fine with our company. For accelerating our business growth in the domestic market, as already informed to you that now we have a decentralized marketing through a company has been incorporated. So who's solely responsible for the business growth? They will be totally focused, and they're building up a team of professionals to take care of the business growth in the domestic market. So everything is being put into place so that we can, our future business growth is more fast and continued with the new product line. So we have a diversified product line, so that will also help us to grow fast. Everything is being taken very seriously, and we are considering all possible ways of growing our business. So new strategy is being formulated. That is, I'm very sure, is going to work, and we are very optimistic for our business growth in the coming time.
That sounds good, sir. So we have already spent more on our R&D side, maybe 14-15 crores, and we are still have to spend some capex of 15 crores. Correct me if I'm wrong. So what will that take our company from? It will help us to add new products, or enter a new geography, we need this fund, or capacity enhancement we require to be done?
We have enough capacity. We have recently built new capacity from the existing product line. We have done a lot of capex on our new product lines. We have done a lot of capex and R&D, which is the backbone of any company for sustainable growth. So our R&D has already come out with the new innovative products which have been commercialized, and some new products which are awaiting regulatory compliances will also be commercialized very soon. So R&D is doing perfectly fine. They are also working on some import substitutes, but import substitution of our raw materials, which are very expensive raw materials, and our R&D has developed some raw materials substitutes, and they are very cost effective. So that will definitely help our company to maintain the product pricing in spite of the increase in the raw material prices in the international market. Will be able to sustain and maintain the product pricing because those products will be indigenized and manufactured in-house. So R&D is doing perfect job. They have been assigned new product development responsibilities. And I have our Director for Research also present in this meeting. He will throw more light on our R&D activities so that, our investment R&D, how it is going to be justified and how it is going to take over this company forward. Let us give the opportunity to Dr. Sai Kalyan to throw light on this.
Sure, sir. Very helpful, sir.
Over to Dr. Sai Kalyan. Please, Dr. Sai Kalyan.
Yes, sir. Good afternoon. The R&D has made significant progress since the inception of the new R&D unit. We have made, as Mr. Modi said, we have made significant moves to do an import substitution for vital raw materials and substances such as hydroxyapatite or any such high-value products. We have complete raw material substitution of around 4 products right away, and we are trying to achieve even more. Coming to the medical devices, we are in the process of making some implant-related products. This year, we have plans to do that, and some varnishes. And the oral care range, which you'll be seeing in the coming months, are all an effort carried out by the R&D unit. And the 3D printing, which are awaiting international clearances, we have already cleared the regulatory hurdles for the 3D printing resins. So this has also been an effort from the R&D team. So we made significant steps towards getting this institution to the next level, and we promise to have such kind of vision for the future also.
So can you highlight upon the 3D dental resins, what this is used for, and what is the market available at our exposure?
The 3D printing, it's a very new growing market in India. Probably, I would say in the next, not 2 or 3 years, in the next 4 to 5 years, it will be a normal thing. In every dental clinic, they would have a 3D resin and a 3D printer as a standalone unit. Like 10 years ago, we never thought we would see high-end equipment like FX locators in clinics, but now everyone has got a radio RVG or an FX locator as a minimum requirement. So 3D printers will change a lot of things. So for a 3D printer to run, 3D printing resins are required, and getting quality 3D printing resins in India locally is a huge problem with only 2 companies in the market right away. And even the other competitor we have does not have access to permanent resin technology for dental crowns, which can last permanent. we have innovative silinated zirconia fillers. This comes from the years of experience we had in the dental material like composite sections. So we incorporated our expertise into the 3D printing crowns. So we are the only one in India probably making this 3D printing resin for dental crowns. We see a huge surge in this market in the next 5 years for sure.
That's great, sir. Sir, I have many more questions. I'll come in queue or may take offline because many things need to be understood, sir. Thank you for opportunity once again, sir.
Thank you. We have the next question from the line of Sandeep from Nuvama. Please go ahead. Mr. Sandeep, your line has been unmuted. Please proceed with your question. So there's no response from his line. We'll move to the next question from the line of Varun Mohanraj from Scalliver Capital. Please go ahead.
Good evening. Thank you for the opportunity. So on the previous call, we mentioned that we have a new plant which has been commercialized with 150 crore capacity. So I just want to know whether this new facility is a multi-facility capacity in which our existing products can also be manufactured, or this facility is specifically for the new products which we are talking about in medical and oral hygiene category.
So we have the existing facility which has been upgraded and the new capacity has been built with the installation of new machines with new technology. We have expanded the existing capacity of our existing product line. Apart from the existing product line, we have separate facility for manufacturing the oral hygiene, oral care products, hygiene products, and biomaterial products. So we have developed a new facility for manufacturing all these products. So we have two different facilities. One facility is for our existing product line, which has also been upgraded and made additional capacity, so that will suffice for the next 5 years. And we have also developed the new facility for manufacturing oral hygiene products. So both are independent, but both are located at the same location, same place, but are independent and they have independent manufacturing capabilities.
Okay, sir. Thank you. So, when these hygiene products are commercialized and start contributing to revenues, would their margin profile be similar to our existing products, or will it be different, sir?
So the plant is fully commissioned. Test run has been done. Only we are waiting for the regulatory approval because these products are under the CDSCO and the state FDA. So all the documents have been submitted. Initial inspection is due tomorrow. After that, we are waiting for their final clearance. So once we get the clearance to operate this facility, we will come out with the commercial production, and the products will be placed in the market. Already we are working out the marketing plan. We have our marketing team who are working on the marketing strategy for these products. These products will be partially sold by our existing distributors, and a new distribution line will also be established for these products. So this is the responsibility of the Denvisio Biomed because they have been entrusted with the sales and marketing responsibility for for entire product line which will be manufactured by Prevest Denpro Ltd. So they are building up their team and also working out the strategy for marketing of these products, and I'm very sure, very optimistic, they'll be very successful, and that these new products will also contribute to our revenue partially in this year, but they will be fully operational and capacity utilization will be much better in the next financial year.
Okay, sir. And we've been talking about getting aggressive on the marketing side of the business. So what would be the average marketing spend per annum going forward, and would this affect our margins going forward?
So market spend, we have allocated a budget for marketing for these products. But at the same time, as our business is growing, so we have enough margins to support the new product line, and I don't think there is going to be any, burden on our funds because the business is growing and we have enough, profit margins to sustain the new product line. So we can manage with the, existing product line, and we have adequate funds to support the business growth of this new product line.
Okay, sir. And one last question, if I may. So the new hygiene products which we've been talking about, is it for the domestic market or for the export market?
All of our products have been designed and developed for the international as well as domestic market. So the formulations are, acceptable in the domestic market and the export market. So we are going to market all of our products in the internationally, including India.
Okay, sir. That's it. Thank you, sir.
Thank you. Before we move to the next question, we would like to remind participants to restrict their questions to one during the initial round. We have the next question from the line of Rusmik Oza from 9 Rays Eco Research. Please go ahead.
Yeah, thanks for the opportunity. Sir, I just wanted some clarification. In the annual balance sheet, we have 12 crores as gross fixed assets and 17 crores as capital work in progress. Just wanted to understand, is this 17 crores towards the new facilities that you're talking about for the hygiene products?
Can you please repeat the question? Your voice is audible but not clear.
Okay. Just 1 second, sir.
Yes, please.
Yeah, I'm saying in the balance sheet, annual report, we've got 12 crores reflecting in the gross fixed assets and 17 crores in the capital work in progress. Just wanted to understand, last year, what 50 crore revenue we did was from 12 crores of gross fixed asset, that is the old facility, and what is the 17 crores of capital WIP? Is it the new facility you're talking about?
Mr. Jawal can answer to this question. Can you please repeat the question, please?
No, I'm saying in the balance sheet, in the fixed asset side, we are showing 12 crores as gross fixed asset and 17 crores as capital work in progress. Wanted to understand what is the 17 crores capital work in progress. Is it relating to this new hygiene facility that maybe is it not commercialized? Is it like that?
Yes. For this balance sheet, we have a total capital work in progress amounting to 17.87 crores. Out of this, we have an expenditure on research and development amounting to 7.76 crores. And for the expansion, it's 10.10 crores. This totaling amounting to 17.87 crores for the expansion and the R&D, both the centers, for both the facilities.
Okay. So our total expenditure in the we have been mentioning is that we are spending or spent 14 crores on R&D facility. So this 14 crore actually, you're saying 7.7 is part of this. So where is the balance? Is it already commercialized in the last year in terms of R&D facility?
Yeah, I'll request Mr. Abdul Modi to respond to this query, please. The total investment envisaged on the research and development and setting up the new facility was about 35 crore. So we had only 17.7 crore for the capital expenditure. Rest of the amount was the investment on the land and building and other durables. So out of the 17.7 crore, we have spent about 7 crore on the R&D, and 10 crore is for the new facility, and rest of the investment has come from our internal accrual. The investment on building and other durables is from our internal accrual, from our reserve, and plant and machinery for the research and development and for the new facility is from the money received through the IPO.
Okay. No, so I'm not getting the maths properly. I'll just give an example.
The operator. Mr. Oza, you'll have to come back in the queue.
But same question. I'm just getting clarification, ma'am. I've not asked any new questions.
Okay, please make this as the last question.
Yeah. So my clarification, sir, is that 12 crores of fixed assets plus 17 crores of gross fixed WIP adds to around 27 crores, and we're talking of 35 crore expenditure on R&D and the new facility. And so with the balance amount we have to still to spend, is it like that in the course of the year?
Some part of the money is reserved for the marketing expenditure, so that will be utilized during the next couple of years' time. So we are putting some money on the sales and marketing expenditure.
Okay. Maybe I'll take it offline, sir, because this needs a little more clarification. Thank you.
Discuss it later on also.
Thank you, sir. Thank you.
You can take up your query separately.
Thank you, sir. Yeah.
Thank you. We have the next question from the line of Hiral Nandu from Kalpavriksha Capital. Please go ahead.
Good evening. Thanks for the opportunity, and pardon my ignorance because I am new to the company. So I need some couple of clarification on the previous questions a couple of participants asked. So on the import substitution product, what would be the cost saving we will achieve with that product which we are developing? And my second question is on the 3D printing resins, what will be the revenue potential we see for next 2 to 3 years in the number term or broadly as some estimate term?
From the import substitution, we are expecting a cost saving of about 1 crore.
Okay. Annually, right?
From the 3D resin, we are expecting a turnover of 2 to 2.5 crore in the next 2 years.
Okay. Sure. Thank you. I'll come for the next question in the queue. Thank you.
Thank you. We have the next question from the line of Akshada Deo from Vivo Commercial Limited. Please go ahead.
Yeah, hi. I just joined the call a little late, so I just wanted to know, have you given your capacity utilization for this quarter?
Sorry, ma'am, capital?
The capacity utilization of your existing capacity. Have you given that number?
Yeah, we have already capacity utilization of 40%. Okay. So this is our present capacity utilization on single shift basis, and we have enough capacity to operate our factory for the next 5 years without any further capital expenditure.
Okay. And sir, have you given your margin split for domestic versus international market?
At present, we do not have the bifurcated figures, but overall our margins are about 40%, in the range of 40% combined. But we haven't got the figures at present between the domestic and the export, so that figures can be provided to you later on.
Okay, sir. And just confirming, the total addressable market that you gave for domestic was 1,000 crores. Is that right?
Yeah. Yes.
So can you give the same for international market as well?
International market is a huge market. It is $20 billion market. And this is like an ocean. We're a very small company compared to the other multinational company, but it's a huge market. With huge markets, about $25 billion market for the dental materials.
So how much America would be a part of the 20 billion?
America is the biggest market. About $8.5 billion is the American market. And rest of the world together, Asia is a very big market. Europe is a big market, but America is the biggest market. So $8.5 billion is the present market size of USA.
Okay. Thank you so much, sir. I'll join back the queue.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I would like to hand the floor back to Ms. Aastha Jain from Hem Securities for closing comments. Please go ahead.
Thank you, Melissa. On behalf of Hem Securities Limited, I thank Prevest Denpro Ltd team for giving their time and replying all the queries in the detailed way. I would also like to thank all the participants for joining this call. Now, I would like to hand over the call to the moderator.
Thank you, members of the management and Ms. Jain.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Hem Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you so much.
Thank you.